Hello friends, till now we have studied what is the meaning of partnership, the features, some important provisions and the preparation of capital account under two methods, fluctuating capital account and fixed capital method. In this video, I am going to introduce you to the concept of the profit and loss appropriation account and we are going to solve a sum on this. So what is a profit and loss appropriation account? Till now, we have seen that in sole proprietorship business, we prepared two statements. One was a profit and loss account and second was the balance sheet. The profit and loss account was prepared to ascertain the profit or the loss of the business. That is, all the revenue minus the expenses. The balance sheet was prepared to show the position of assets and liabilities. In a partnership firm, we prepare one more account, that is the profit and loss appropriation account. Now suppose your revenue for the year was 1 lakh rupees and the total expenses of rent, salaries, etc. was 80,000. So the profit as per PL account will be 20,000 rupees. Now, if it is a sole proprietorship business, this entire 20,000 profit belonged to the owner and it was directly added to the capital. But in case of partnership firm, this profit of 20,000 has to be divided among all the partners in the profit sharing ratio as defined in the partnership deed. So, for dividing this total profit among the partners, we prepare the profit and loss appropriation account. All the payments that will be made to the partners in the form of, say, interest on capital, interest on drawings, salary, etc., are recorded in the profit and loss appropriation account. So we can say that profit and loss appropriation account is merely an extension of the PL account. It shows how the profits or the losses are distributed among the partners. All the adjustments with respect to interest on capital, interest on drawings, salaries, etc. are routed through this account. So let us look at the journal entries. The profit and loss appropriation account begins with the profit or the loss as per the PL account. So, to transfer the profit from PL account, the entry is profit and loss account debit to profit and loss appropriation account. Had it been a loss, the entry would have been reversed. That is, it would have been profit and loss appropriation account to profit and loss account. Second entry, for providing interest on capital to the partners, the entry will be now interest on capital is a nominal account, so it will be debit all expenses. Now this is an expense to the firm, so interest on capital will be debited since it is an expense, and partners capital account is to partners capital account for transferring the interest to PL appropriation account. The entry will be profit and loss appropriation account debit to interest on capital. Third, for charging interest on drawings, now interest and drawings is an income for the firm, so the entry will be partners capital account debit to interest on drawings account. For transferring the interest to profit and loss appropriation account, the entry will be interest on drawings account debit to profit and loss appropriation account. Fourth, where salary is paid to the partners, so the entry will be salary account debit, salary to partner account debit to partners capital account, and for transfer the entry will be profit and loss appropriation account debit to salary account. In all these cases, wherever we have credited or debited the partner's capital account, if the method of preparation of the capital account is fixed capital method, then the debit or credit will be to partner's current account. Now that we have seen the basic journal entries, let us move into a question. So let us begin with the question. It is given in the question that A and B are partners sharing profits and losses in the ratio 3:1. On 1st April 2019, their capitals were 50,000 and 30,000 rupees respectively. During the year ended 31st March 2020, they earned a net profit of 50,000 rupees. The terms of partnership are interest on capital 6% per annum. A will get a commission of 2% on the turnover. B will get a salary of 500 per month and a commission of 5,000 on profits after deduction of all expenses, including such commission. The partners' drawings are given and the turnover for the year. We have to prepare a profit and loss appropriation account and partners' capital account. So let us first draw the format. Profit and loss appropriation account and partners capital account, debit, credit. We have two partners, A and B. So it is given that on 1st April 2019, their capitals were 50,000 and 30,000. So on 1st April 2019, by balance brought down is 50,000 and 30,000. Next we have they earned a net profit of 50,000 rupees. So the entry for net profit will be profit and loss account debit to profit and loss appropriation account. Therefore, on 31st December 2019, by profit and loss account 50,000 rupees. Next we have interest on capital is 6% per annum. So the entry for interest on capital is when charging to the partners, we have interest on capital account debit to partners account. So it will be interest on capital in the capital account and to interest on capital in profit and loss appropriation account. So it is given as 6% per annum. The capital for A was 50,000 rupees into 6%, and for B is 30,000 rupees into 6%, giving us 3,000 for A and 1,800 for B. The next entry is given. A will get a commission of 2% on the turnover. So, profit and loss appropriation account to partners commission account so A will get 2% of the turnover. Turnover is given as 3 lakh rupees in the question. So 3 lakh into 2% gives us 6,000 rupees. Every 31st March, by commission, A will get 6,000 rupees. Next it is mentioned that B will get a salary of 500 per month. So the entry will be salary account debit to partners capital account and partner profit and loss appropriation account to partners salary account. So it is 500 per month, that is 500 into 12, which is 6,000 rupees. Next we have B will get a commission of 5% on the profits after deduction of all expenses, including such commission. So, before providing B's commission, the profit after all expenses is 50,000 rupees minus 4,800 as interest on capital. 6,000 is A's commission, 6,000 is B's salary, giving us 33,200. Now it is given that B will get the commission after deduction of all expenses, including such commission. Means we will have to deduct B's commission as well. So B's commission will be calculated as the profit after all expenses into 100 by 100 plus the rate, that is 105. So why did we do this? This is like a unitary method. This 33,200 had two components. One was B's commission at 5%, and second was the profit that will be divided among the partners. So if the profit is 100 after all the commissions, 33,200 represented 105%. That is why we have divided the total amount by 105 to get B's commission, which is coming as 1,581. We'll do into 5 because we have to calculate what is the commission portion. Okay, because 105%, 105 is representing 33,200. So 5%, which is actually B's commission, will be 33,200 by 105 into 5, which is a unitary method. So B's commission is 1,581. Next we have the partners' drawings are given as 8,000 and 6,000. So the entry for drawings will be partners capital account debit to bank account. For A it is 8,000 and for B it will be 6,000. So now we will calculate the total profits attributable to the two partners. That is, to two partners capital account debit, profit and loss appropriation account, two partners capital account. The total is 50,000. If we subtract all the expenses from 50,000, we get a balancing figure of 31,619. So the profit sharing ratio is given as 3:1. Therefore, A's share will be 31,619 into 3 by 4, and B's share will be 31,619 into 1 by 4, 23,714 for A and 7,905 for B. So we'll post this entry in the capital account by P&L appropriation account. It is 23,714 for A, 7,905 for B. So the total balance will come as 50,000 plus 3,000 plus 6,000 plus 23,714, giving us 82,714 for A, So to balance carried down will 74,714 for A. Similarly for B, the total is 47,286 for B. So the balance carried down will be 41,286. So with this, we come to an end to this solution. I hope this question is clear to you. If you have any doubt, you can post them in the comment section below. Thank you.